Hi, everybody. This is Gary G with Sentiment Timing, and this is our free weekly video report for Tuesday, June 27th, 2017. We saw some selling going on today, and it's not unexpected because we're in the process of looking for an interim top forming, and that's within the Golden Halo formation that Woody's been talking about. And I'll go through all of that in tonight's video, as well as some of the charts and what we see going on. One of the things that makes the Sentiment Timing newsletter so unique is that nobody else really around that I know of can offer time, and that with the combination of time, sentiment, and technicals. And what that basically reveals is when the trend is going to reverse, why it's going to reverse, because sentiment is the herd mentality. You're always going to get extreme sentiment readings at tops and bottoms. And then the technicals, in which basically 99% of the people out there use, when it's combined with both time and sentiment, makes things a lot easier to figure out if it's a real turn or it's just a little blip in the screen. So again, this is something that nobody else can do, because the sentiment, Woody Dorsey is one of the few people in the world that actually have track and diagnose investor sentiment. I know there's sites out there that do, investor sentiment, but you don't know what that means. He's been doing it for over 40 years. He's one of the pioneers in the sentiment data collecting, and he knows how to read them. Again, that's one of the things that I've said over and over, is that if you don't know when to expect the market to reverse in advance, how do you know where it's going to reverse? Because everybody uses your, say, yeah, let's say Elliott wave and fib retracements, but they're not going to work if a top or a bottom isn't anticipated for another 2 or 3 weeks, because those levels are not at the time part for the reversal. But as you close in on when the predictive reversal is going to take place, it now you could pay attention to these support levels, the wave counts, and go into a minute structure to try to figure out exactly where it's going to reverse. And that's really the biggest difference in sentiment timing, is that, using those unique three features that nobody else can really use. And it's used on, we don't really pay attention too much to the big picture, because the big picture doesn't really do anything for you. And I'll give you an example right now. This is the weekly chart of the S&P. So yeah, the bigger picture is that, there could be a decline that's going to come 500 points down, 700 points from where we are. But the thing is that we are, most likely going to be in 3 or 4 different trades before it actually gets down here, because it's going to take a bigger time. And this is not even the bigger picture. This is just something, a trade that could take place within the next couple of months, and that's something we are going to be eyeing down, and what the Golden Halo formation is anticipating. But more in a range, when people give you 5-year outlooks, it doesn't really make all that much sense. Trying to predict what the market's going to do in 5 years, because there's so many different variables that could change during that time period. So anyway, that's one of the reasons what makes us much different, and we're able to we have a time period to be looking for these reversals, and from there, as long as sentiment is matching up and looking for the same type of reversal, whether it be to the upside or the downside, we can then go into the technical aspects and try to figure out, okay, if the S&P goes above this level, the low is in place, or if it goes below this level, the top is in place. And it gives really traders an advantage that they can't really get anywhere else. So this has been something that Woody's been saying for quite some time now, and it's we have good news, the new highs going on, everything is good, and what he calls that is the Golden Halo formation. And right now we are in the twilight zone, and it means that the topping process is very mature, and it could take place at any particular time period. So the Golden Halo, I keep mentioning that, and because it's something that Woody has invented. And the reason why it's really important is the one of the he this was a golden halo time period back in 1987 when when Woody was trading, and this is when he started identifying that pattern. And you can see what happened. We had a in a 3 week time period, the Dow lost over 37%. Now, is that what we're calling right now? Absolutely not. We don't know when, how big or how hard the market will fall. We don't even know if it's going to have that big of a fall. But the thing is, the pattern is in place, and that's what you really want to, just keep in mind, is that this golden halo pattern, when it comes, you have to pay attention to it, because if you're caught on the wrong side, whether it be you're short or you're long, the market's not giving you a chance to get out. And when you play a reactive trade in this market, half the time you're getting stopped out at even, you're getting frustrated, you're paying commissions. But when you kind of have a good anticipation of when to expect the market to reverse, and you have a pattern in play like the golden halo, and then from there you have sentiment that's matching up to it, it all makes sense. And why, one of the things that we've been saying for the past couple of weeks is that with the high sentiment readings that we've been getting, it's never a good time to buy when we get a high sentiment reading, and I'll show you what that means. But this is the reason why the dates are important. Is this is just an example, and this is just recent, back on May 9th. What Woody had said was that, for the last 2 weeks, he's been targeting a generic high on May 10th and May 15th. Now, it was never going to be the big top that he was anticipating, but it was a generic high. And you can see on the 10th and on the 15th, we had fairly big drops in this market. And so the traders knew, this was only a day before, but we had the 15th here was another one, which is almost a week before, and you can see what happened to the market. So that's what Woody's say technical timing indicators do. They project when to expect a top or a bottom in the market, or a trend reversal, however you want to look at it. And then from there we just do the combine the sentiment readings on things. So here's our most recent report, and what Woody has been saying is that the high sentiment readings that we've seen over the last month, does this look like a top or a bottom? And that's what we mean. Notice every one of these lows has come in at very low sentiment readings. The tops are a topping process, and when you get this type of move where all the news is good, sentiment's good, price is going up, that's the golden halo, and that is really what we're looking at right now. And it's something that you really are, when you're positioned properly, you can make a real lot of money on things. So let's go through just the regular charts. Now, again, this is the bigger picture, and this is what from the golden halo position. Could this play out? Absolutely. Do I know it's going to play there? No, I have absolutely no idea. Once the drop starts, Woody's going to have the low date to start looking for it, and from there we can then start adjusting where the price may bottom. But we don't do that before, and that's why I'm not saying, oh, we're coming down to 1772, or we're going to wait and see how things react to this golden halo time period, and when it goes down, that's when we start predicting where, we start looking for where price may reverse, and we're also most likely going to get a series of very bearish sentiment readings, and that's going to be really the confirmation of things. So let's take a look right now. Today's drop. Right now, what the bulls have to do to get out of the woods is probably poke above this 24.44. Everything before that, these are all resistance zones all the way up here. So they dug themselves a little bit of a hole. The thing that had me a little bit skeptical on with the bulls is each one of the moves that they got up was in a huge gap move, and from there they got sold off. So nobody was really buying these gaps. It was not a gap and go, and that's a red flag if you're looking to just go along the market, because if the only way they can move it is when the S&P cash markets are closed, and then once they open, they start selling, that's not an environment you want to be buying into. You want to be shorting those rallies. So they have support levels on the S&P that's right at this 2417, 2 points lower. If they break below that, now we're hitting the lows that we were back in June 9th, and that's down at that 2415. Now, if they break, Then we're going to get a panic trade down to the 2405 or possibly down to the 2397. So these are your next two important support levels. This pattern is a reverse symmetrical triangle. I've been showing it since really this top right here, and I said, if this plays out, we could see the S&P trading all the way down at the 2375. What the bears need to do is get it through this support level to get to this support level, and if they're able to push through that, then we're going to come all the way down. But before we do, you can look at whether there's patterns in play or not. You got to wait for these support levels to break. So that's about all I have for tonight. Like I said, so today was a pretty big move. We're right at some important levels. We have some time periods that we're going to be watching, and it's really let's just say the clock is ticking for this golden halo pattern to play out, and from there's going to be a significant drop, and I think a lot of people are going to be caught by surprise. So with that, have a great night, and I'll talk to you guys next week.